What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Tuesday, May 28th. All right, guys, so Palantir stock back on Friday. We closed the day up 29 cents a share. It's plus 1.4%. That was regular trading hours, up a couple pennies here in the after hours, heading into the close of after hours, up 3 cents. So, listen, either way, it's essentially flat, but take after hours with a grain of salt no matter what, because volume is very, very low. The only exception to that is if volume is very high for whatever reason. Typically, that's going to require a business-specific catalyst that hits in the after hours. Of course, nothing on Friday. So let's take a look at this as we head into the new week here, the short week after the long weekend. And let's pull out all the directional bias we possibly can through a variety of methods here that we'll go through. We'll look at implied volatility. If you're trading options, it's particularly important. We'll take a look at the expected move for tomorrow and the directional bias coming from the chain as we head into tomorrow. So let's start here with a volume profile analysis and try to pull out some directional bias on the 5-minute chart. Listen, guys, by the way, Palantir is a daily upload. I cover this stock heading into every single trading day. So I appreciate you subscribing to the channel. Helps out tremendously, and I will keep the videos on Palantir coming. Now, if you're new here, what we're really looking for is directional bias in the volume profile that goes along with the underlying move that we all already know occurred. But we're peeling back the onion. We're looking under the hood. So we had a smaller green day on Friday. So what we want to look for is, was there any bullish bias in the volume profile that helped support that, or did it actually flip the opposite way and we saw some bearish bias on any pullbacks that kind of outweighed any bullish bias? So let's take a look. We had a very contextual open. We expect high volume, and then we expect volume to quickly fade off. We had a couple of pops here on both sides of the ball, green and red. Not enough to truly assign bias on the couple hours after the open. As we move through the day, you'll notice we get this pop. Okay, it's only 2 consecutive bars, which is very light, but volume is clearly out of context. So on a scale of 0 to 100%, 100 being like the highest amount of bias we could possibly see, I'm going to call that honestly like 10% bearish bias. It's very light. And then in, this one here, it's an outlier, too risky to assign. Into the close, pretty contextual. This big red bar here, that's going to be the rebalancing bar on the day. So nothing unexpected into the close either. Okay, so that's all we had was this little pop right here. Again, about 10% bearish bias. If we move on to something arguably a lot more simple, I think, and easy to follow, but also incredibly useful information, let's look at the psychological self-fulfilling prophecy levels on the most popular time frames we can pull up, the 30-minute, 4-hour, and daily. And the white line is the 50 period, the gray line is the 200 period on all 3 of the charts. Those are very, very commonly used, which is why we're looking at them, right? I want what has eyeballs and what will have traders and institutions, therefore, making decisions around. So back on Friday, guys, we actually did something that was helpful for bulls. We reclaimed the 50 period that we had given up just a day prior on Thursday. So we reclaimed it. We brought in for a pullback, in for a test, right? And we bounced. Now the bounce, it wasn't tremendous, but it's certainly there. Okay, so that's a break and hold of the 50 period on the 30-minute chart. That's good to see. But listen, come tomorrow, come Tuesday, bulls, any retest of that 50 period, I want to see that now hold again as support. That could give us an opportunity to use that to help gain some momentum. It's kind of like a trampoline, right? To help push us up toward the ultimate test, which is going to be the 200 period, at least here on the 30-minute chart. Bears, really simple for you guys here tomorrow. Ideally to regain the best look possible on the 30-minute, you're going to want to give up this 50 period just to discourage as many bulls as you possibly could who are looking at the 30-minute, which is basically everybody, and reclaim that 50 period as resistance. The 4-hour chart, if we take a look, you can see here that if we look, we are approximately 1.4% away from making a retest of the 50 period on the 4-hour chart. So this one, again, is very simple. Bulls, ideally, if we could reclaim that 50 period and claim it as support tomorrow, Tuesday, I think that would set us up pretty well for the week, as long as we could maintain that heading into like Wednesday, maybe even Thursday. So that is kind of the ultimate goal if you're a bull. That would probably require about at least a 1.5% upside move here tomorrow, which is certainly not out of the question for Palantir. We've seen much crazier things out of this stock. And if you're a bear, if we see an upside test of that 50 period, it's already about 1.5% against you in that case. But in that case, you're going to want to see that reject because we've been struggling with that level a little bit as of late. But it'd be very helpful to not give that up, obviously, if you're a bear. So you can kind of maintain that descending trend, at least on the 4-hour here. Now, on the daily chart, this is arguably the most important chart of all. And you can see here, we're in kind of a wide channel between the 200-day and the 50-day moving average. This exact chart is one that I would argue most people and institutions are paying attention to. So it's very contextual and very important to at least be aware of. But the channel's so wide, right, that we can't really expect that to be like an immediate concern on both sides. So what we've been looking at here is that channel between 21 and 22. Which back on Thursday, we actually gave up hard to the downside, which was not a good thing to see. Well, on Friday, we barely cracked back into that channel. So this is really a simple one on the daily tomorrow. Bulls, I want to see 21 act as support and bounce us up deeper into that 21 to 22 channel and really kind of solidify our position in there. So then we can look to move up toward 22, inevitably the 50-day moving average in coming days. Bears. If you guys could reject hard off $21 a share, that would be very helpful in maintaining the lower end of that channel as resistance, which would, I think, encourage some of your peers as well. Now, implied volatility, you can see here, compared to the last week, it's very low. Compared to the last month, it's very low. Compared to the last 3 months, it's very low. IV on Palantir is the lowest it's been, at least in the last 3-month time frame, compared to a week, a month, and the full 3 months. So if you're trading options, it's very important to be aware of that. I tend to always try to find stocks that I have a strong directional bias in and where IV is very low to start buying options. Low compared to my intended trade time frame, right? So understand, if that's you right now on Palantir, IV being low, you're paying very little Vega value up front, which can be helpful, especially if you start seeing IV bounce back toward the equilibrium, at least in that time frame, because that directly actually benefits your contracts. You, of course, still have to be directionally correct, but there's more than one factor, of course, that influence the pricing of a contract, and having Vega, which is IV, on your side is very, very helpful. You don't want to get IV crushed. You don't want to be on the wrong side of volatility, just like you don't want to be on the wrong side of direction if you're taking a directional bet using options, which of course is not always the case. But let's take a look now at the expected move here for tomorrow, Tuesday. So we have weekly expirations. The next expiration we have is May 31st, which is Friday. The expected move by Friday's close, okay, compared to this last Friday's close, is plus or minus 80 cents per share. Now what we can do here, since we have 4 trading days, divide, because we're trying to get tomorrow's expected move, right? Specifically, divide that by 4 trading days. We get 20 cents. Add back 50%. Okay, and we get 30 cents because, right, if you just divide by 4, you're assuming all green or all red days. Silly assumption. We have to add back a little bit to make up for that volatility. So we get an approximate 1 standard deviation expected volatility out of Palantir tomorrow, by tomorrow's close, compared to this last Friday's close of plus or minus 30 cents. Okay, that's the market's expectation. All right, you disagreeing with that, that can become a window to potentially take a position. Now, you might be saying, okay, directional bias. Well, let's take a look at the volume. So we have 223,000 total contracts that were traded on Friday. 152,000 were calls, and 71,000 were puts. All right, now, if we break that down by time frame, we go with the short-term speculators. We get a similar bias. We get 55,000 calls and about 20,000 puts, the 0 to 20 delta range, right? The highest concentration of short-term speculators that we can get. So we're seeing call side bias on both the overall call put ratio and out of the short-term speculators. Listen, guys, if you're appreciating the daily Palantir videos, please, best thing you can do for the channel, leave a like on the video and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.